Little flare dance before for Louise. She really liked it. Welcome to QAV, everybody. This is episode 443. We're recording this on Monday, the 25th of October, 2021. With me, as always, my Yoda, Tony Kynaston in Sydney. How are you, Sifu?
Am I good? Good.
Am I?
Am I good? No, doesn't Yoda say the sentences backwards?
Oh, good am I?
Yes, good am I?
Like that. Yeah, okay.
Yeah, no, I'm great.
And that's good. You enjoying your freedom down there in Sydney?
Starting to, yeah. Yeah,
Good stuff.
it's a real desensitisation process. I'm sort of slowly getting out there in the world again. But it's quite confronting. No one's wearing masks. Everyone's doing their thing. I still
Haven't been
don't
able to
feel
get that
completely
hair
safe.
appointment yet, I see.
Tomorrow at 2:30.
Wow. Okay.
Yeah.
Big day. Big
I
day.
am.
And with us also from Sydney is Louise Bedford. Welcome to the show, Louise.
It's so good to see you both.
So good to see you too. Now, Louise, I'm sure most people in the investing community in Australia know Louise. We had her partner, Chris Tate, on the show. We just worked out in April 2020, just as the COVID cough was starting to hit us. She's a well-known author, founder of Talking Trading, known as the Candlestick Queen, which I thought was an ABBA song, but it was a different. I think that one there was like a deep cut on a B-side somewhere there. The Candlestick Queen. How are things going for you, Louise? Are you enjoying your freedoms?
Oh, look, I just find that it always takes us a while to change gears, but I'm very much looking forward to and very optimistic about what's coming next year. It's been a pretty rough 18 months, but really let's just kiss that goodbye and look into the future.
Hasn't been rough for us in Queensland, I have to say. We've had a great time. We don't know what you're all complaining about. It's been fine up here. I don't know, bunch of whingers down south. So,
Yeah.
Louise, we've got a lot of stuff to talk to you about today, but one of the things that we thought we'd kick off with is something that we've talked a bit about on the show before, and you're a great person to guide us in this area. We've often wondering why a relatively small percentage of the listeners of our podcast are ladies. And, you know, I've seen a fair amount of research out there saying that women don't tend to be active investors as much as men are. Do you think that's true?
Look, I'd love to say that women are absolutely going head to head with the guys in terms of numbers, but currently we're just not. So if we look at the traders in my trading group through tradinggame.com.au, we've got about 70% male traders, 30% female traders. But the interesting thing is that the women are outperforming the men.
We've heard that. We've heard that women statistically tend to get better results than men. Why is that, do you think?
I think there's a few reasons. Firstly, I mean, once we become that 50-50 level with parity between men and women in terms of numbers, then perhaps this effect will dry up a little bit based on this characteristic. But I think the people who are very much the forward-thinking female, the ones who have a big purpose and a big ambition and maybe even a few extra IQ points, are the ones going into the markets first. So that 30% that are in my database, when you look at them from a world view in terms of their own experiences, they're slightly better paid than the average, they're more ambitious, they're more focused, and I do think that does help, but there are quite a few different reasons.
As Donald Trump would say, you're sending us your best. You're sending your best women in there to invest.
I do think so. And another one of the reasons I feel has to do with women's lack of confidence around this. We know it's a male domain. I've been trading since 1990, and when I got started, I used to go down to the stock exchange and there'd just be little old me, and I'd look down a line of men with their navy blue suits and their ties, and I'd look up the other line line, and there was just testosterone everywhere. So I think really what we're looking at is that women know they're going into a field where they traditionally haven't been welcome even, and they have to really take that into account. There's an aspect called stereotype threat, which is when a particular minority knows that people have a stereotype concept around them, that they unfortunately are likely to fulfill that concept by the things they do and say. So women having that lack of confidence, in a lot of ways, I think it actually works in their favour. Sure, they do feel a little bit unnerved. They take longer to put on their first trade. They need more direction where they feel like they have to ask more questions. But the good thing is they do their research, they're conservative, they don't dive in, and they really take their time to examine every single trade that comes across their desk.
Do you think they're not as susceptible to sort of, I don't know, sort of wanting to look good, wanting to look like a big dog? You know, I think men get sucked in a lot easier to, you know, being able to, you know, brag to their mates about how good their portfolio's doing and how much their Bitcoin's gone up in the last month, and did you buy the dip and all that kind of stuff. Are women less interested in that kind of chest-beating aspect of investing, maybe?
Yeah, ego-driven pursuits, I hear what you're saying. I think that does have something to do with it. Interestingly as well is that men often trade a lot more than women. So women are waiting for the perfect setup, the perfect execution, and then they act, whereas the guys are going to move forward even if they're not as confident. This actually also mirrors itself when you look at the HR personnel type of environment. Women are less likely to go for that job unless they have already done that job before, whereas a man only has to know 70% of that new role for him to say, of course I can do it. What do you mean? I've never flown a plane before. I'm sure I can do it. I've done it in the simulator. Give me a shot.
How hard can it be?
Exactly.
It sounds to me like it's a bit like marriage. Like, I've been married 3 times, but my wife, Chrissy, waited until she found me. So she waited till she, you know, found the best, and then she did it. I sort of had a couple of, you know,
That's a beautiful thing.
Trial runs. Yeah. Maybe it's like
Isn't that interesting?
All right.
Well, look,
Enough
I think
of my
we need to
stupid
get
punditry.
your wife on the show, and then I can ask her some questions on your behalf.
Well, she keeps saying she's going to listen to the podcast, but she's been saying she's going to listen to my podcasts for 13 years and hasn't yet. So we'll see how that goes. Tony, do you have any more intelligent questions than I do?
Yeah. Well, I mean, this is kind of an interesting discussion because you feel like we're reinforcing stereotypes just by having it. You know, like my first question was: is there a difference between the genders in terms of their approach to numeracy? You know, so the men tend to either be trained or have a different grasp of numbers, which is, I guess, a requirement for investing that women may not have.
That's a bit harder to answer. We don't
Yeah.
actually have data in relation to this. A lot of the information that I'm providing for you is based on a couple of different studies. Terence and it's Odine and Barber, they are the ones that actually put together a massive longitudinal study about men versus women. I actually replicated almost the exact same results of that study in 2019 based on 2,000 traders, nearly 1,983 traders, and we looked at their own results based on gender, whether they took a particular amount of time to put on a trade, how long they took educating themselves about the markets prior, quite a few different metrics. So your question is a little bit more difficult. It's outside the scopes of the research that I'm more familiar with.
Yeah, right. So I guess whatever the reasons are, what can we do about evening up the score between the genders when it comes to investing?
Well, I think the first thing is for the women to note that the men are not outperforming So having that bit of knowledge is a good thing. And men can learn from women in quite a few different ways. The guys that I have a look at so many trading plans, I've literally looked at thousands of trading plans, and the guys who actually take their time, have a little bit more, I guess, of a breath, of a pause before they dive on in, they're the ones who end up on top. So I don't think it's necessarily a question of one gender being better than another. I don't think it's a war or men versus women. I think it is who you are. The people with the best self-knowledge are the ones who come out on top.
The people with the best self-knowledge. What do you mean by that exactly?
Usually, the people who have done the most self-work are the ones who make the most money. Currently, I'm training a recovered alcoholic. He had his last drink, I'd say 30 years ago, but because of his past, he has got such a strong background with knowing who he is, knowing his flaws, knowing his strengths, knowing the areas that can act as a trigger for impulsive behaviour, understanding where that obsessive compulsive drive comes into it, that his trading results are so pure. And I see it time and time again. The people who know the most about themselves, who understand themselves, are the ones who have the bank balances that just keep on growing and growing.
So it's almost not a gender thing, but much more a resistance to an impulse thing.
And habit forming, I think, also. So often with habits, we're trying to develop good, healthy habits, but why are we trying to do that? The way that I think of it is that we're trying to develop those habits so that we can free up mental resources, so that when we get a shock from the markets, or if there's something that requires creative thinking, we have enough bandwidth to be able to process that extra stimulation. So I've got a couple of degrees. Does that help me trade the markets? No. But I can tell you what it does do is it makes you feel like you can do things. And that can be difficult, because the halo effect for medicos, for engineers, for people who think they know what they're doing in their own occupation, can infiltrate into the share market. People's egos can take over, and before you know it, you've got a medico having put on 5 trades saying that they rule the world. So we do have to watch that as well.
Yeah, good. So I just have a question about terms here. So when you talk about trading, how do you define that term?
Anybody putting any money into the market. So it can be that you're a longer term investor, it can be that you're in a position for 5 years, or it could be somebody, I personally don't day trade, and there isn't as much money in day trading, let's face it, but some people do like that short term end of the market. Interestingly, the facts show that that medium term level tends to derive the most profit.
The medium term, so like what would be the average holding for a medium term investor?
Between 12 weeks and about 30 weeks, that would be considered medium term. The boundaries are somewhat fuzzy, there is no doubt, but if you look at that, I think that'll give you a good perspective. The short-term trading, looking at everybody's results as they come across my computer screen, I can see with short-term trading, some people hold a position for 4 hours and maybe up to 2 weeks. That could be considered short-term. And of course, the longer term would be over that 40, 30 week mark.
So you run a trading game simulation where you gather these statistics, do you?
I run surveys into my client base, yes.
Right, okay.
So that's the thing, having a background in psychology, you treat all of the people in your life like little rats in a maze, and you start to ask questions about their performance. So I think I've carried that over throughout the years, and my beautiful community of traders have been quite tolerant with me making them jump through those hoops.
Right. So you must have built a profile then of what a good trader is, whether they're male or female. What are some of the key aspects besides impulse control? Because you said before about OCD. I actually think that some of the, I think investing suits someone who's a little bit OCD. I know with myself, I'll often go down the rabbit hole, I call it, either looking at numbers or thinking about something new and trying to work out how to use it or turn it to an advantage. Is I see it as being a positive. What kind of things come out in your profile around that?
Well, let's have a look at how this is actually defined. So the obsessive part of OCD is usually to do with unwanted thoughts. The compulsive thought is to do with actions. So we've got obsessive for thoughts, compulsive for actions, and D is your issue disorder. So unless you've been professionally qualified to be able to give that diagnosis, you can't actually say you've got OCD. But if you have got unwanted thoughts and that's creating repetitive actions, then you do probably need to seek some sort of help, some sort of structured program through cognitive behavioural therapy to assist. But in terms of what your probable question is, where you're looking at the implications of that structure, the routine, the ability to go through 1 to 2 to 3 in terms of a list, all of those are terrific qualities. In fact, I'm married to an engineer. My engineer trading friend here just beside me, he just took this up and ran with it. Took him a while to do because every single I had to be dotted, but his results were outstanding from a very early stage. So even though what you're referring to, there are aspects of OCD in a lot of people who have a good trading track record, it's not actually the disorder part that is driving that behaviour.
Yeah, sure, you're right. I'm certainly not using the psychological term, I guess, to describe that behaviour. But certainly, some aspects of it, the attention to detail, the ability to focus and concentrate for a long time, I think is important in being able to invest or trade.
Oh, I completely
I actually have a
agree.
bit of a problem using the word trade. I prefer to call it investing, and that just might be me. But I see it as being, as far as the stock market goes, we're buying parts of companies and trying to identify which companies we want to be a part of rather than moving tokens around the board.
We can definitely call it investing. I think the difference between trading and investing is that traders, and in your definition of investing, I think it would be the same, they analyse, they start with the end in mind, and they're prepared to exit a position. So if you're already of that mindset where you're not going to be wedded to that share, it's not going to be something that you're going to end up dying and leaving in a portfolio as a legacy, you're prepared to sell it, that's where I'm talking about trading, regardless of the time frame. But let's call it investing. We want to keep you comfortable, don't we?
You paying attention, Cameron, here? Look, see how I'm being treated by another podcaster? Sorry, I did interrupt you before, Louise. What are some other aspects of that make a good investor/trader that you've been able to profile over the years?
One of the major concepts behind successful traders is that they have a persistence and a willingness to just jump through those hurdles. The difficulty with a lot of people in the civilian world, like if we just say the civilian world are the non-traders and investors, whereas we're actually on the pointy end, we're the action takers, people give up so easily, don't they? They just chase shiny objects, they throw money away, they do things without foresight, and that is not what we need as an investor. We need to stay fixed to the one concept and follow it through. We need to work on a written trading plan or an investing plan that covers our entry, our exit, and how much money to place into each position. So if we've got that professional view from the beginning, we are stacking the odds in our favour. And just probably one extra thing that I think is really relevant. The majority of traders that I've trained who are really kicking goals, there is a reason within them why they want to trade. And it has to be a good reason, something that will keep them going when things get tough. If the markets are throwing signals and they're getting confused and overwhelmed and their life is in disarray, they still know at their core, at their identity level, that they are an investor, and that can hold them true and keep the course until they actually succeed. I think that is very much underestimated as a personal quality in terms of success seeking.
Yeah, look, I'd agree. I think the old saying, if you don't if you don't stand for something, you'll fall for anything, holds true in the market. You've got to have an approach or a system or a framework and stick to it, and only move away from it under extreme circumstances, and hopefully not ever. Otherwise you will flap in the wind. And it's one of the things that we see with some of our listeners, that they are, I guess, trying us out or trying our system out. They're still wedded to other ones. They still sort of play the field in terms of subscribing to lots of newsletters and podcasts and things like that. And whilst I wouldn't be critical of that, hopefully it's a transitory stage, because you really can't
So you wouldn't be
ride two
critical of
horses.
that. See, do you know, Tony, I would be. I would question why you need 500 different sources. The more effective traders, I think, follow mentors that have similar values and a common direction, rather than ones that are actually all over the place, because those mentors, even the podcast hosts, if they're not aligned with their values, they're going to end up confusing your people. So actually, on your behalf, I will speak critically of people who have more than 3 or 4 people that they're listening to about the markets. It's very difficult for beginners to know what crud is. You know, I'd like to use a stronger word there, but I guess there's going to be children listening somewhere. So I do think we have to be very careful about the sources that we allow into our minds. People watch the news far too much, and they wonder why they're sad and depressed, and all they can think about is COVID.
Yeah, look, it's a good point. I'm glad you make it. I guess I agree with you when I'm saying I'm being less critical. I think
You're magnanimous. I'm not.
Well,
I'm not as magnanimous. You're probably taking the higher road there, but I do want people to question
Tony,
that.
It's not just that. It's that I think that this is the point I was going to make. I think people are on different stages of their journey, and one of the things I think keeps the civilians out of investing is the education is so poor and so narrowly held. You really have to seek it out in our society. No one taps you on the shoulder when you're 15 and says, "Hey, this is what you really should be focusing on because it'll set you up for life." They don't. They go and play football, go and learn accounting, or go and do some maths, and that's all good. But it's been such an important part of my life to be set up financially that I think it should be the first thing that's taught in schools, but it's not.
Yeah, I completely agree. I do think we do have a reputation in Australia as ripping down tall poppies also. So we have to be really cognizant of the wealth mindset that we're transmitting, not only to the next generation, but also to our friends, because we are a product of the people that are closest to us. So I do think we have a bigger ripple effect that we're responsible for than most of us realise.
Yeah, look, I think I agree. And it is an interesting part of Australian culture to not flaunt your wealth and to not, I try and keep a low profile in terms of how much we're worth and our experiences. Although it's been quite a journey for me to come out and talk about all this stuff in public. But
how much is that again?
I'm sorry, you're breaking up, Cameron. But I think one of the interesting parts of that psychological journey was reading a book called The Millionaire Next Door, which was out
absolutely.
about 20
I love
years ago.
that book.
Yeah, so do I. Which is probably more in tune with our culture, which is the person who might have all the money may not show it. They might just be driving a Subaru and going to the shops to Coles and Woolies like you do every week. So yeah, that was interesting. But yeah, good. I mean, good point. Good. There are cultural aspects to this, and just as there are gender aspects to it, I think the other thing though is there are educational aspects to it, and it's how do you hunt that, whether you're a female or a male or a civilian or what? How do you hunt down and find that door, the right door to go through? Door number one, door number 2, or door number 3, because one of them is going to lead to a really nice life, and the other 2 are going to lead to pulling your hair out, probably.
Well, I think you have to be quite refined with your search. When you're looking for a mentor, you need to see that they've had longevity in the markets, that other people trust them. Ideally, you'd become in touch or familiar with some of the people that they've trained already. Have they got testimonials? Can you actually talk to those people? And when they're asked a question out of left field, can they answer it? You know, what is their breadth of knowledge? I think it's really important if you ask a question and the person that you're asking it to doesn't know, that they don't just make up an answer, that they say, that's interesting, I'll research that, instead of just feeling that ego pressure to answer. So that's, I think, a really important part about being a beginner trader. Looking for a values match, looking for that ideal Venn diagram where you've got that beautiful overlap with experience and knowledge, and making sure that the people that you're trusting have those skills to be able to take you on to the next step. And of course, the other aspect is, do they even care? You know, we need people who are going to nurture us, who are going to look after us, who are going to personally guide us. And that's why I love what you guys do. You're putting out free resources to help traders, and that shows a magnanimous quality of spirit there that so few mentors actually possess.
Oh, thank you. So who are your mentors, Louise? Who did you found that you matched up most with when you first started?
Look, I was extremely lucky to have Dr. Harry Stanton on my team from quite a young trading age. Harry, if you don't know Harry, he's the author of Let the Trade Winds Flow. He recently passed away. He was a guiding light in my life since the age of 15 when I first read his book, The Plus Factor. My sister gave me his book. I was at the normal teenage 15-year-old, you know, I was ready to fly off the handle. I wanted to run away from home, and my sister gave me the book. She said, read this book. If you read it and you still decide to run away from home and leave school, you can come and live with me. But if you don't read it, then you're on your own. Isn't that good for tough love? So Harry Stanton eventually joined the share market as well as a trader, and I became good friends with him in the 90s. So to have that guiding light snuffed out, I mean, he was quite a mature man by the time, but just it was never long enough. He had such a mind and was a constant source of encouragement for me.
I'm not familiar with Harry Stanton. What kind of investor is he?
He loved options, he traded with candlesticks, but he definitely had that medium-term type of view as well for his standard portfolio. He's a psychologist that helped high-performance people, so whether it be traders or Olympians, he helped people quit smoking. He just had such a wealth of knowledge. And his book, Let the Trade Winds Flow, what a spectacular book, and what an honour it was for me to be able to rewrite that book for and with him just in the last few years. So that is one of my, I feel, big life work goals, to have helped a mentor.
That's lovely. Lovely to hear your passion, Louise, too. It's fantastic.
That's good.
Yeah.
Who have you got for mentors?
Tony comes to me with all of his big life questions, particularly investing.
Yeah, I can see that.
It's little known fact.
I'm Cameron's grasshopper. He keeps telling me to take the pebbles from his hand. I just can't quite get there yet.
Well, it's good to know that you've got your levels there as well, that you've checked out your mentor very carefully.
Yeah. No, my mentor would be Warren Buffett, Charlie Munger in the main, and then people who flow from there, from the value side of investing.
Beautiful.
Yeah.
Can we talk a little bit about candlesticks, Louise? You know, Tony would know a lot about them, obviously, but for people like myself that are new to investing, I've never really used candlesticks. Can you give me a quick précis on how you use candlesticks?
Absolutely. Well, look, we have to fix this, don't we? My goodness, Cameron, you really, as soon as we're off this call, you have to go to your next chart and switch it over to red and green candlesticks for me and have a look, because you'll see in uptrends, green is the colour of growth, and that means money's pouring into that share. People are loving it. They can't get enough of it. It's actually a depiction of emotion in that share chart, looking at those green candles. And then what about when it flips over? All of a sudden, money is bleeding out of that share chart and you've got red candles on the way down. So firstly, you've got the ability to analyse the colour, and then in a more close micro way, you've got the ability to look at specific candlestick patterns. They tell you when the sentiment is likely to change. They give you a guide when to enter a position as a retracement trade, and for short-term trading, they're a beautiful entry signal as well. So you can use them across any time frame, but ideally you're using it just as the trigger. You also want a setup to be based on weight of evidence.
And Tony, why don't you use candlesticks?
What?
Oh, look,
Sacrilege.
Yeah, I don't. Well, my saying is, if the only people who make money out of charts are sea captains and map makers. So we do. That's not fair, because we do use a very, very simple entry and exit system that I call 3-point trend lines, which is just really looking at the high points and low points on the ranges and using those as exit and entry points. I spent a lot of time investigating technical analysis, and really found it okay, since we're being straight talking, I'll call it the astrology of the scientific world of investing.
Ah, yes.
A lot of hocus pocus.
Well, I would like to challenge you on that. I think a lot of value investing is terrific in terms of which shares to get involved with, but technical analysis can tell you when. So you can combine the two. It doesn't have to be an either or. Be careful about that binary thinking, because that can end up depriving you of hundreds of thousands of dollars. So I would suggest you question your views on that. I would love to be able to be the one to say, question it, because there's money in there for you if you look at it in the correct way. So I think the mistakes people make with charts, and I do agree with you to some extent, is that they think that it's like tea leaves. They don't use a trading plan to guide their decisions. That investing mindset, everything they're talking about being conservative and taking their time and being very executive function oriented, all of that goes out the window, and they just go, hey, the magic of the chart. That's not where we need to be at all. This is a part of a structured, routine-based, focused method of trading, where it is more akin to that engineering mindset than it is to the astrology mindset.
No, look, I accept that, and we do use charts ourselves all the time to buy and exit them, but I try and keep it as simple as possible and stay away
good.
from the oscillating waves and the Dow theories and all those kinds of things.
Yeah, no, I'm hearing you. I think the majority of traders who complicate things, they forget that when the markets are open, our IQ drops by about 50%. So we really do need to have a simple system that we can execute time and time again without question. If you can maintain that as your focus, where you have that detachment from the results, and you just do the same thing again and again based on a system of entry, exit and position sizing, you're going to be in the top 5% of traders. It's always easier said than done, but listening to resources like this, that can help reinforce it time and time again. It's like vitamin C. You keep on needing to get that fix to be told you're on the right path.
No, it's good. I mean, it's exactly right. I mean, the psychology of it's very important. I mean, Cameron and I were talking about it a couple of weeks ago, that he sort of moved into a new mode of thinking when he was talking about his investing, where it was more like a game rather than being emotionally attached to the money that was involved. And I think that's a really important step change in someone's progress through trading. And there's a number of step changes like that psychologically, where you do remove yourself from the bear pit, I guess, and the impact that something might have if it goes against you, for example, and focus on the process and the game of it rather than the dollars involved.
I think that's...
levels there are in investing.
I think that's absolutely right. We need to stop looking at the outcome, even though that is, of course, why we're trading. And we need to look at that process and make sure that any of the variables that we change, we only change one thing at a time. So the thing I think I see a lot of traders do without that specificity of action is that they say, okay, this is wrong, this is wrong, this is wrong, I'll change it all and then I'll see what happens. Unless you have that scientific approach of changing only one thing at a time, you will end up not knowing why you made the money on the other end.
Right, yeah, and I certainly think that modelling and regression testing has been a big part of my investment journey. They're very important skills to have as well, to be able to test that controlled variable and see what happens.
Absolutely, and to also, when you're going through that back testing, don't switch off your emotions. Imagine if you were in that trade, how you would feel if you were stopped out at that point. Imagine how you would feel if the share kept on going up after you were out. Try and put yourself in the position. There's a concept called the Post-Mortem. Have you heard of that?
Well, I know what post-mortems are, and certainly did a lot of those in business. Yeah, post-implementation reviews for sure.
Yeah, so this is a technique, a game, if you like, that you can play. It's a really cool thing to do when you're involved with any project that's looming ahead of you and seems very high impact. I'll give you an example. Before I started Talking Trading, which is the podcast that I run, as you know, what we did is we got together with the team that was going to launch it, and we said, imagine we are 1 year down the track. Talking Trading has just died in a screaming heap and we all hate each other's guts. Now, everybody write down on a piece of paper why, what were the preceding conditions that created this devastating impact. And it was fascinating to read because the problems that all of us revealed on our pieces of paper were exactly the things that happened. But because we'd pre-considered how to get out of that situation, that actually meant all the difference. We already had those tools available to help us overcome those difficulties. Traders should do this too. When you're starting out in a trading career, whether it's a full-time trader or whether you're just doing this on the side, have a think about, in 1 year's time, if everything goes just haywire, why would that be? Could it be because you didn't have a mentor? Could it be because you didn't listen to enough podcasts like this, so you lost the belief? And these are the three areas that it usually is: system, psychology, or maintenance. Which of those three are your weak point? And if you know it, how do you actually scaffold your way into helping yourself become the best trader you can be in that specific area?
Yeah, I think maintenance is probably the most important one that people overlook a lot of. We had a listener dinner in Melbourne, and I was asked what's the most important thing, and I said, you guys got to realise that you'll be doing this for the rest of your life.
Yeah.
And they everyone went quiet, and as it sort of sunk in that this wasn't just something they'll try for 2 weeks and then move on somewhere else. If they're serious, they've got to keep doing it every day, every week, every month, every year.
And that's where burnout can come into play. You know, trading is such a high performance endeavour that I think it is subject to so many of the emotional foibles of other high performance endeavours. We think that just because it's a little thing on the side, that how hard can that be? But actually we do have to self-protect in terms of how much time we're putting in, the decision fatigue that we're encountering, and the lack of support sometimes that we can encounter.
No, you got it. No, Louise, I told you, I paid you $50. You got to tell Tony he's going to be putting in more time, more effort. Don't scare him off, Louise. He's already working more now than he's worked in 20
Correct.
years.
Yeah, and for less income.
So Tony, you're trending well.
Yeah, that pre-mortem idea is a really good one. We talked about it a couple of weeks ago, based on what Charlie Munger says about inverting things. If you want to, and his quote is, if you want if you want to help India, first of all, work out how to hurt India.
Yes.
Well, you reduce the sanitation, you keep everyone in their caste system, and that tells you what you need to do to improve things. So it's a similar sort of concept of inverting. What could go wrong and how do we guard against it?
And from a trading perspective, just a really quick inversion that you can do, if you've got the type of software that lets you flip your chart, if you are still long when you flipped your chart, there's a problem because you're barracking for it to go up when it's upside down. So that can be an interesting little mind check. If you can invert your charts, invert them and then do the analysis and see what comes out of that.
So you're saying be led by the analysis rather than where the chart's going?
Absolutely.
Yeah.
You should be detached enough to be able to take the signals that are actually occurring rather than the ones you wish were occurring.
Yeah, good point.
Well, I think we should wrap it up, Louise. We've got to get into some Q&A, but thank you so much for coming on. Unfortunately, I can't take your advice regarding candlesticks because you told me earlier to have one mentor and listen to him, and that's Tony. So you have to convince Tony about candlesticks, and because I just do whatever he tells me to do, and so far it works okay. But terrific to have you on, and just tell people out there if they want to hear your podcast, where to go.
Come and visit me for my podcast at talkingtrading.com.au, but also, especially because I know this will combine well with the things that you're already learning, come to tradinggame.com.au, tradinggame.com.au, and download my free trading plan template, and I'll even send you my Trading Made Simple audio 5-part course, and I know you'll love it. Very complimentary with what you're already doing. So Cameron and Tony, a lot of my traders are listening to this. I am really excited to be able to present you to them. How do my traders contact you and access this wonderful podcast and some of your other resources?
Thanks, Louise. Yeah, I guess they just go to our website, qavpodcast.com.au, or search for QAV on the podcast app of their choice.
And of course, QAV stands for Quality at Value, which is our system, our mantra.
Or it's Latin for quid annus victorious. One of those. I don't know. I just made it up. It sounds like it should be Latin, doesn't it? I think we have to come up with a Latin something. So it's just, it sounds more highbrow than quality at value. I think I'm going to add that to my task list for this week.
Yeah.
All right. Well, thanks very much, Louise. Enjoy your freedoms and the rest of your afternoon. Have a nice one.
Pleasure.
Thanks, Louise. Look forward to having you back on sometime too.